Greetings. Welcome to the most underrated show on YouTube. So many degrees flying around today. Everybody has a degree. All right. Smash the like button. Let's get started. Futures are pretty much flat, and that's pretty much to be expected. Pretty much everything that Powell said that Powell is going to say today basically was said yesterday in his note, but everybody wants to hear it so they can react to it. So, like I said last week, when all the chaos ensued, I said everything's going to calm down, people are going to digest everything, and we're going to have markets rebound like they did yesterday. So I wouldn't be surprised to see more of that today after whatever he says comes out, because people just love chasing this news. But yeah, let's do it. All right, let's start with Michael Burry. Was the big short investor Michael Burry right about crypto and meme stocks facing the mother of all crashes? Let's see here. So Michael Burry, for those of you that don't know, he was basically the premise of the movie The Big Short. Great movie about the crisis that happened in 2008. He started going after mortgage-backed securities, realizing that everything was getting totally out of whack, and he made billions and billions of dollars making that bet against the market, against the mortgage-backed security market. So he garnered his fame from his crisis-era bet on the housing market in 2008, 2009, and that if you haven't seen that movie, please watch it. Please watch it. Very good movie. And the way that they break it down into layman's terms, they bring in different celebrities to start explaining things. They bring in Margot Robbie. They bring in, well, I don't know, because that's the only one I paid attention to. But it's a very good movie and a very good breakdown. So yeah, everybody does have a degree. All right. So Burry, he tweeted something, and this guy always puts a tweet out, then deletes it. And he was cautioning the mother of all crashes. So although the market isn't contending with as severe a downturn, the mother of all crashes tweet might imply that the momentum for Bitcoin and crypto has decided to go on the downbeat. This is another crazy thing out of the story. AMC is up over 2,500% in the year to date, and GameStop is up almost 1,000%. I mean, I know those things go crazy, this and that, but when you actually see those numbers, it's like, wow, that's really incredible. Michael Burry is the poor man's Gary Maturis. I do love Gary. I'm reading the Buffett annual letters right now, going back to, Paul, you can say something. I think it's 1954, 1952, something like that. But those are pretty interesting, and it's interesting to see his consistency on his principles over that long of a period. Let's see here. This is a very good quote. Punditry on the outlook of crypto and meme stocks, which are driven primarily by social media trends and not necessarily by the fundamental factors. Excuse me. Ugh. That was weird. Not necessarily by the fundamental factors. What fundamental factors? I don't even know how you say not necessarily. There really is none. Crypto in its brief history has notably been volatile and subject to a period of euphoria, crashes, long bouts. Remember, guys, back in 2017, Bitcoin, I think it ran up to I thought it was like 19,500, something in that range. And then it went back down to like 6,000, 4,000. I don't know what it was, but there was no reasoning for it back then. There's no reasoning for it now. So let's just keep an eye on that one. Be careful if you're in crypto, but what do I know? I don't know anything about crypto, especially according to some of the trolls. All right, is this going to work? It's not going to work. All right, so China's renewed crypto crackdown wipes nearly $300 billion off of the market as the coin slides. Let's see. China's renewed crackdown, as they blamed it yesterday on the environment. They said it's not environmentally friendly, so that's why they're going to ban it. I do not think that the Communist Party of China is going to ban something based on environment, seeing as Seth pulled up a number yesterday when we were recording. They create a new coal plant, 30 coal plants per month in China. We haven't created one since the 1960s, I believe. I was talking to my dad the other day. He when he was still practicing, he went to China a lot. And he said that it was incredible when you would go there on a Friday, when they would stop the factories. And those of you that are in China, you could probably speak to this. when you go there on a Friday, the clouds are just, I mean, you can't see through the sky. You can't see the sky. You get to like Sunday night, really late Sunday night, you can start to just see like the sun peeking through or something, or you can start seeing the sky peeking through, and then right back to it on Monday morning, and you get that haze of industry that happens over the city. But it's really incredible. So their whole premise of saying that it's not good for the environment, it's actually quite comical. It's even more comical if somebody actually believes that. But so Bitcoin was down 2% around 32,000 this morning. And, you know, who knows? This thing could easily go up something crazy. But also, Alibaba's Alipay said that they were going to start taking crypto, and the Bank of China said, you're not going to do that. So, Reagan, touche, my friend. That was actually a really dumb comment. Touche. You are correct. All right, let's go to Lordstown. So previously, and I've since been corrected. If you're watching, thank you for correcting. Lordstown has gotten to the point where they're only accepting fleet orders. So last week I said that I couldn't order a truck on their website, and I didn't understand why. Now I finally understand why. Because you had to order sales, and I was so confused. Why do you have to contact sales? It's because you have to order in fleets. So they're not accepting individual orders for these trucks. I don't know if they did. I thought they did, but they're not anymore. So that would explain that. But the more you get into this Lordstown stuff, honestly, the more comical it gets. And of course, when stocks get beaten down like this, the stories start coming out, and this kind of stuff coming out about turkey hunting and whatnot. But who knows if it's true? But it's pretty funny. So, I think this guy's a former CEO. He's not anymore. But him and 5 executives sold $8 million in stock over a 3-day period in February. A Lordstown spokesperson confirmed that to the Wall Street Journal that Schmidt sold his stock to expand his new turkey hunting farm in Tennessee, which, after seeing the direction that Lordstown is going, might not be your worst idea. Maybe try to diversify a little bit. But Lordstown said, and I guess you can go to Lordstown now. Seth did say he's going to go after the show today, after the live stream today. So we'll see what's going down at Lordstown. It's only about 40 minutes away from where we're at. So the vehicle purchase agreements that have been made generally include a projected buyer order schedule over a 3 to 5 year life of the agreement, and may be terminated by either party with a 30-day notice. So basically what they're saying is that the orders are not completely secured, and that's that. So they do not commit to kind of blah, 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 blah. Okay, that's that for Lordstown. It's funny. Keep watching it. Keep day trading it. There's no reason not to day trade Lordstown. With the swings that you're going to start seeing with Lordstown, it's actually quite entertaining. There's no doubt about that. So Louis Vuitton. So Louis Vuitton, great company. I have been in their store one time. He makes an argument. I mean, purses don't really do it for me. Neither do Louis Vuitton wallets. But let's see what he has to say. So the Louis Vuitton CEO. There are questions about the future of retail, but French luxury goods giant Louis Vuitton has no doubt what it will look like. We see the future being two things: being mostly retail stores, because the client experience in a retail store cannot be matched easily online. And then he said, as of today, no one has found a sort of miracle formula that would enable clients to enjoy as much online. Now, I know I think he has to be talking about touching a tangible item, but for me, I mean, you know what? He's right. I'm just going to think of it when it comes to watches. If I'm looking at a watch, not a purse, I would much rather go in person and hold the watch and put the watch on, etc. So I do understand what he's saying when it comes to high-end items, and no one can really replicate that online. So I guess he's right now that I just thought about it. But he's saying that stores are going to be around, and yeah, I hate them. I mean, this Carlos said I hate them all. I personally do also. I do not like going there. But people do like going to malls. It's going to be very interesting to see what happens to malls, shopping centers, more so malls, over the next a couple of years. I could get a Merce. You know what, Stephanie? I really want one because I have a lot of things that I have to carry in my pocket, and I really want to put a bag of some sort, but I'm not carrying around a Merce or a satchel or whatever you want to call it, even though Indiana Jones wears one. All right. The second point is to enrich it. You guys tell me in the comments, where do you guys think that shopping is going? I'm very interested to know this. I just look at stores like I look at company. We did a review on L Brands a couple weeks ago. Maybe it was last week. And I look at stores like Victoria's Secrets, and I have never seen one of those stores not inside of a mall. I think they're also Bath and Body Works Bath and Body Works. So those I've seen in strip malls. I've seen them standalones, this and that, but I've never seen anything like a Victoria's Secret not in a mall. I'm sure there's other stores that I haven't seen that I just don't pay attention to them. Maybe Banana Republic. I've never seen a standalone Banana Republic. So high end will be the brick and mortar. Yeah, I think high end will probably be the brick and mortar. So I do agree with that. We'll see what's going to happen. They got a lot of information because they can come to the store. Okay, so that's that. By the way, Louis Vuitton. I don't know if you guys saw this. This was a very interesting acquisition. Louis Vuitton last year completed an acquisition of Tiffany, the whatever you call it, the jewelry company. They originally agreed to a deal that was more than $15.8 billion. Then something happened where Louis Vuitton bailed, and then they went back in and they decided to make that happen. Who said something about? Yeah, okay. So that's shopping. I'm very interested to see. Bath and Body Works is like Starbucks, always empty pockets when I leave. That's pretty funny. All right, this is a cool article. A lot of similarities, definitely some differences. So this is a good one. It looks a lot like 2004 in the markets. Morgan Stanley says, what happens next? So this is their call of the day, whatever that is. 2001 was beginning to resemble 2004, a year that offers many clues to investors what will happen in the months ahead. Now, of course, things are just not going to repeat themselves, but it's interesting to draw similarities, and this is a pretty good one. After the recession ended in 2001, a deep malaise set in until 2003 when unemployment peaked and markets finally got troughed. Let's see. He noted that the rally of the 2000s, classic early cycle stuff, with strong performance in small caps, cyclicals, commodities, inflation break-evens, and low-rated credit. The rally meant that the markets entered 2004 with a lot more in price. Now, here are the similarities. The forward price-to-earnings ratio of global equities was 17 times compared to 20 times today. The 10-year Treasury rate was 2.3% against 2.26% today. The VIX, and I've said that I do not love the VIX as much as I used to because of the stock buybacks that are happening. I think that this sways the VIX in one direction or another, but for the purposes of the article, the VIX index was at 15 in the start of 2004 compared with 18 based on Sunday. Also, the dollar index was 87 January 1, 2004 and currently sits at 92. So, growth and inflation moved higher in 2004 and the market's tone changed as the economy recovered. Energy, utilities, industrials, and staples were the best performing sectors globally, while communications, healthcare, materials, and tech were the worst. Tech, you're starting to see a lot of volatility in tech. Healthcare, there's just the uncertainty of where healthcare is going to go. Materials, I'm looking at as far as we don't really have. There's a lot of shipping issues going on, so very interesting in that regard. There are differences, though. For example, the Fed was hiking interest rates in 2004, while the central bank has only just signaled rate increases will come in 2023. In 2004, that marked the midway between the end of easing, a 25 basis point cut in June of 2003 and started tightening 25 basis point hike in June of 2004, offering more in common with today. Now, here's the big thing. Finally, Sheets highlighted how quickly things can change, noting that on January 1st, 2004, the Fed was emphasizing patience, but in June, it was embarking that hikes would be raised by 425 basis points over the next 2 years. So maybe that was the reasoning for a lot of the excitement last week that was happening, that we can already that things can escalate very quickly when it comes to rates, especially if inflation just keeps going on the rip that it's been going on. So I want to do Ray Dalio real quick. I used to like Ray Dalio a lot until he started saying cash is trash, and I just I didn't agree with it. And he got crushed going. He's been having, of course, I mean, rough time is all relative, but he's been having definitely a more difficult time than they've been having in the past. So. And of course, he's the largest hedge fund manager of the largest hedge fund in the world, Bridgewater. They're massive. So Dalio, in a conversation with economist and former Treasury Secretary Lawrence Summers at the Qatar Economic Forum, warned that it will be difficult to avoid overheating of monetary inflation due to a flood of bond issuance. Dalio said, "I'm not particularly worried about the classic demand pushing up against supply. There's something like the 10% GDP stored in financial assets. It is likely going to be a big pickup in demand." All right. With the U.S. deficit set to rise, the country will have to sell a lot of bonds to investors who hold bond inventories despite carrying very low interest rates and negative real or inflation-adjusted inflation rates. This comes at a time when the Chinese capital markets and other capital markets are becoming more attractive to global investors. So he is big into, he's very versed. From what I've read, I don't know if he's accurate or not, but he's very, very versed over in China, Chinese economies and whatnot. Anytime you see somebody talking about Chinese markets, Chinese economies, commodities in China, anything like that, Dalio's name is always attached to them. He lived over in China for quite some time. He also got his start in commodities. That's where he really crushed it and made a name for himself way back. I mean, a long time ago. But there's no doubt that he's a good investor. His fund is all you need to know about it. All right, that creates supply-demand situation that can bring monetary inflation because there will not be enough demand for those bonds. As a result, the Fed, this is a very interesting part of the article. As a result, the Fed won't be able to taper or cut back on its own purchases of bonds and may have to actually step up those purchases. We're talking about that $120 billion a month asset purchase. He's saying that they might have to step those up to prevent the interest rates from rising, because any interest rate rising is going to do exactly what it did last week, and it's going to be crazy. Rovin, happy birthday. So the Fed. So somebody asked me earlier, the Fed, what's the deal? And is this the beginning? Was Wednesday, Thursday, Friday the start of something? Who knows? I can't predict markets, but when I see stories like this and I see Jerome Powell and the other Fed presidents saying things like this, I have to believe that this is not the end. I mean, could be totally wrong. They tried to prop things back in February and March of 2020. Didn't work out too well. They recovered it, but they couldn't stop the fall. So Fed Chairman Jerome Powell on Monday said that he showed no sign of interest in taking his foot off the gas of propelling the U.S. economy forward. We at the Fed will do everything we can to support the economy for as long as it takes to complete the recovery. So to me, that just means as long as they need to keep doing the mortgage-backed security and bond treasury purchases, they're going to keep doing it, and they're just going to do whatever they have to do to keep it going. Some Fed officials are calling the central bank to slow down or taper purchases. Last week, Powell said the central bank would start to discuss the modalities of slowing down the purchases, but he didn't mention any taper in his prepared remarks. Inflation is, and he's still sticking with this transitory inflation based on transitory supply being affected. Supply being affected over a short term. Let's see. Stocks jumped on Monday as investors shook off concerns that the central bank was poised to at least start talking about taking the punch bowl away from the party. I like that one. It's also incredible to me that a story can come out on Monday after we have the crazy end of last week that we did, and then you just put this in there and throw something out that the Fed's not going to raise rates, the Fed's not going to start cutting their asset purchases, and then all of a sudden everything's okay, let's run it back up, everything's going to be just fine. It's really something. So all right, let's see what the yields are at. So the yields, 10 years moving back up slightly. The 3-month is steady to yesterday, but it's starting to creep. But that's not really a creep. This is seeing a creep like 2 basis points is like raising the interest rates 25 basis points in 18 months from now. It's no doing. All right, guys. So let's see how many subscribers we have. Give me 1 second. I just want to give you an accurate number. We have 49,734 subscribers. So that means that we're going to be giving away a Tesla in less than 300 subscribers. If you want to be eligible to win the Tesla Model 3, all you have to do is sign up for our Patreon if you're not in there already. If you're in there, you're good. $24 a month gets you all the software for free, gets you access to our Discord, some discounts, and of course it gets you entered in to win the Tesla. If you want to join the Bid and Ask Nation, that's my tier. That's where I spend the most time. $68 a month, only 22 spots left. Guys, at the end of the month, this price is going up. This price is going up, and this price is going up. This, of course, you get our Discord with over 600 people. As of yesterday at like 3 o'clock, there were 601 people. So it's broken down very easy. It's not overwhelming. You have plenty of chats in there. If you want to talk about one subject, you go to this chat. It's broken down very well. And that's that. And then, of course, if you are in real estate or you're doing a deal or something and you want to consult with someone, Paul, there's nobody better than Paul to consult with. $10,000 gets you a consultation with him, and you can go ahead and do your deal and hopefully make a lot of money on it. So the futures are ticking up a little bit. And yeah, that's it. So let's see what we got. We got about 7 minutes left. You guys give me some ticker symbols and I'll roll with it. Let's see here. Spicer said, what did he write? When one of the financial institutions fails because of the rate raise, which, yeah, that's likely to happen, or one mortgage lender does the same, it will be the end of the market. It will be the end of the market will crash. I do not disagree with you. Would I please take a technical look at QFIN? Just because you asked that so politely, I will. And I haven't seen your name before. Who said that? Where was that? QFIN. Barkan. All right. So I see why you're asking me about this. So you've had quite the run up. There's no doubt about that. And you're getting dicey. So if I'm you, I'm starting to take profits, no doubt. And it's because of this. You're just reversing hard over. It's coming right back. I'm not selling my position. All I'm doing is taking profit. So let's say you had $1,000 invested in the stock. You made 10%. So now you have $1,100. Sell $100 worth of stock. Leave your initial investment of $1,000. And maybe this thing will reverse. Maybe it'll get going. But at least you're going to put some money in your pocket. And when this red line drops below 80%, exit the position and move on. So if you want to learn how to do that and stuff like that, join the Bid and Ask Nation. Let's do plug. They reported earnings today, did they not? No. I'm sorry. They reported earnings June 10th. No, it was today. Oh, okay. Who reported earnings in? I can't remember. All right, so Plug Power reported earnings before the bell. They're up 4% right now. Let's see what's going on. This was on my watch list, but I just couldn't. I mean, This is on my watch list for a certain reason. If you're in the Bid and Ask Nation, you know why. If you're not, you got to join to figure out why. But I would love to see this thing up here. That's all I got to say about that. So let this one settle down. If you want to day trade it, get at it. Should I stay in Roku? Let's see what Roku's doing. Oh yeah, Roku looks good. You got over your 100-day moving average yesterday. Awesome. A little steep on your stochastic, but it's not that bad. Great volume. Looks good. Let me zoom out just a touch because I want to see. This is probably not a 50%er. Ish. Yeah, I mean, you're going to face, Mendy, you're going to face resistance right here, which is pretty much where you're at. So if you can get over that number, this candlestick right here, you should be good. But it's looking pretty good. All right. Let's see here. What's up, Nick? All right. ASO. What is ASO? Okay. Oh, this is that sports thing? Yeah. And don't they have very light volume or something? What am I looking? Oh, no, it's not bad. You're good. All right. Their IPO, that's what it was. They're a newer company because I don't see a 200-day moving average here. Let's see. Yeah, that's what it is. So they're not even 200 days old. So just make sure you're playing stops on this thing. And I probably wouldn't be adding to this until I break out to a new all-time high. Shane, I'll do that one for you. ZUO. Guys, if you like when I answer these questions like this is what you're going to get in the Bid and Ask Nation. And it's not just me. I have great ambassadors in there that when I'm not around or can't answer your question, it'll get answered for you very quickly. Like days like today where I'm going to be recording all afternoon. Nick, Cash, Caesar, Noah, they're going to be in there answering your questions. They're going to say exactly what I'm going to say. This is an incredible stock. That's all I know. So amazing run up so far. But let's pull up a line. And just see. Okay. Who found this? Who found the ZUO? Shane. Interesting. Shane, are you in the Bid and Ask Nation? I swear you are. Is PLBY Playboy? I'm not looking that up. SWBI. Oh, this is your Smith & Wesson. So what happened with this? Somebody tell me why Smith & Wesson did this. I don't know the reason, but they've had a heck of a run up. So if I'm you, please take profits up here. I'm not telling you to exit the position. Just take profits up here. That's what you need to do. All right. Fine. Just because you asked again and you're a nice person. PLBY Group. I don't know what this is. Not looking good. I mean, it's brand new. It's not even 100 days old. Yeah, I'm not. Don't do something like this unless it's on a day trading chart. Yeah, Shane, message that one to me somewhere in the Discord. Put it in the general chat. Ammo shortage and earnings beat. Cool. Please take profits on it because that run up is totally irrational. Let's see here. What time is it? 29. I'll do one more stock. And it's not going to be Alibaba. Best money I ever spent. Thank you, Shane. Tell them. Magic Formula stock. ATOS. Holder exit. ATOS. You got it. ATOS. I wonder if this is going to be... Oh, man. Okay. So right now, this is a snapback. So you're in a downtrend coming down. You made a nice run up. You had some great W formations moving up there. And then you had this big snapback. So if you're long in this, please exit because you should not be long in this. You're in a downtrend. Please take advantage of this. Jump up and are you at all-time high? Yeah, please take advantage. I mean, this thing is probably going to go to 100 tomorrow and you're going to say that was dumb. But if you're going to stick to my rules and my principles, you got extremely lucky here. So take your profits and run. So, all right, guys. You guys have a wonderful day. I will see you tomorrow morning. Remember, live stream at 1 o'clock today Eastern time. And I am not going to be here on Thursday, Friday, or Monday. But Seth and I did make a video. You guys will have that at 9 o'clock one morning. It is an extension of the Employed Trader. So those of you that aren't in, you'll kind of figure out a little bit more about it. Those of you that are in, you already know. But that's it. So 1 o'clock today Eastern. I will see you there. Have a great day.